Hey, it's Jackson with StudentFi.org, and this video is going to cover everything you need to know about income share agreements, also known as ISAs or educational investments. So what is an income share agreement? Well, it's basically a contract where a company invests in covering your education in exchange for a percent of your salary for a set amount of time, as long as your salary is within a certain range. So there's really four parts to consider. There's the minimum, the percentage, the duration, and the cap. The minimum is the minimum salary that you have to have in order to actually start paying, right? So it's kind of a guarantee that if you're making below a certain amount, you don't have to pay. The percentage is that amount of your salary that you're going to have to pay back. The duration is the amount of time, so maybe 10 years. The percentage usually between 2 to 10, but it depends. And then the cap, though, is the maximum amount you can pay back, right? Because let's say you have a 5%, income share, and you get this incredible job out of college where you're making $200,000 a year, right? You would have to pay back a ton of money, but in this case, you usually don't because there's a cap on there that's the max you have to pay back. So, final thing to consider now that we understand the basic fundamentals is that an income share agreement or an educational investment is not a loan, right? A loan is a set amount of money at a set interest rate. You borrow it and you have to pay it back. An income share agreement, on the other hand, is more like an investment. So they're paying for your tuition in order to get a percentage of those potential future earnings. But like we said, depending on the terms of the agreement and the minimum, you might not have to start paying that back. So now that we understand that, let's just think about an example. So let's say that you have a 5% 10-year income share agreement and you got a job out of school making $50,000. So that first year, you'd pay 5%, right, which is $2,500 per year, or about $200 per month, excuse me. And so let's say maybe, after a few years, you get a promotion, you make $70K. Well, then that same percentage, 5%, you'd pay $3,500 per year, or about $300 per month. But here's the interesting part about an income share agreement. Let's say instead of that promotion, something happens, COVID, part 2, whatever, and you all of a sudden are making $25,000 a year. Assuming that's still above your minimum, then you'd only be paying, again, it's that same 5%, but you'd only be paying $1,200 a year, or about $100 per month. Right? So we see that depending on your salary, right? We said 50K, you're paying $200 a month, 70K, you're paying $300, 25K though, you're paying only $100. So it moves depending on how much you make, so there is more flexibility in that sense. But that's basically how an income share agreement works. If you want to learn more about that, you can go to StudentFi.org and find our pages and our info forum. But that's going to be it. So if you have any questions, drop a comment, reach out to us on our site or on social media, and that's it.